Hey everyone, Alphabet is slated to report first quarter 2024 earnings results after the markets close on April 25th. So investors are curious, asking if they should buy Alphabet stock before earnings, after earnings, or if they should buy at all. So I'll answer that question. Also, investors want to know what they should look out for in Alphabet's upcoming earnings results. I'll go over that as well. I'll provide a preview of what I'm looking for when Alphabet reports earnings. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, so far year to date, Alphabet stock price has performed relatively well. It's up to $158 per share, up from about $140 per share to begin the year. Now, Alphabet is not up as much as other large cap AI stocks like Nvidia and others, but Alphabet is still up nicely, and that's despite what has been consensus that its AI rollout it fumbled. It fumbled on the AI rollout. So Alphabet is a little bit behind in how it's rolling it out, the introduction, the catch up after OpenAI launched ChatGPT, and then Alphabet, in a kind of rush to come out with its own product, came out with something, brought it out, relabeled it, renamed it, you name it. It's fumbled the release, to be sure. However, if you look at the actual product, it's relatively similar to ChatGPT. Of course, if you're a power user and you use it more frequently, you'll notice some differences and you'll notice the superiority of ChatGPT. Although for most folks, they won't notice the difference between Alphabet's AI and ChatGPT. Of course, it hasn't yet taken a big share of Alphabet's market. In its latest quarter, which I'm going to share with you right here, you can see revenue jumped to 86.3 billion, up from 76 billion. That was a 13% increase year over year. And so Alphabet hasn't experienced any kind of pressure in terms of revenue from the competing ChatGPT and other large language models. So far, it's just been something that consumers use sometimes for other use cases. They're still using Google for search, and they're still using YouTube for learning things and searching things and looking up products and things like that, and entertaining themselves, all of which is still driving Alphabet's business. When ChatGPT first came out, there was a lot of concern among investors who thought that maybe that would take over Google's search engine, and maybe Microsoft infusing its search engine with ChatGPT would take over some search engine market share from Alphabet, from Google. While that might be the case on the margins, for the most part, that hasn't happened just yet, and I don't suspect it will. I don't see a major reason why it will, in having used both ChatGPT and Alphabet's AI. I'm not a power user of artificial intelligence. I don't find it extremely helpful for my use cases, for financial research at least. It's not very useful at all. I can understand, I see the use cases for coding and that sort of area, but that's not search engine business, so that's not going to impact Alphabet either. So most of those risks that we're worried about in the early rollout from ChatGPT, those have been diminished for the most part. So Alphabet CFO saying that they remain committed to our work to durably re-engineer our cost base as we invest to support our growth opportunities. That was the big thing from Alphabet in 2023, which I'll talk a little bit more about later, was the big cost-cutting plan, the thousands of jobs that they reduced in the company. And that's helping. You can see the operating income in the latest quarter jumped from 18.16 billion up to 23.7 billion. Operating profit margin improved from 24% to 27%. A lucrative business model, to be sure. Now, this is despite the fact that Alphabet has several long shot projects in the works that's costing the company on the bottom line. that sometimes may come out with a product or service that turns out to be profitable, as in the case of its Google Cloud business that's now a segment that could generate over 1 billion in operating income in 2024. That's a project that Alphabet started in recent years that's turned out to be profitable, and it also investing in Waymo, driverless car technology. Tesla's getting a lot of attention about driverless car technology. Alphabet has arguably one of the leading products here in Waymo, so that's something to look out for the long term, not anything in the near term. So I mentioned I would talk a little bit more about the cost cutting plan. So in January of 2023, they announced a reduction of workforce and recorded employee severance and related charges of 2.1 billion for the 12 months that ended December 31st, 2023. In addition, they're taking actions to optimize the global office space. As a result, they took some charges for office space of 1.2 billion and 1.8 billion respectively. So another 3 billion on top of the 2.1 billion. So there was several billion of expense stemming from that cost cutting plan. And if you were watching my videos when I reported on this, I highlighted two things. Number one, I was glad that they were finally doing some cost cutting because that was long overdue for Alphabet. I felt their expense base was bloated. Number two, I was disappointed to see how many billions they were taking in severance charges. And I was reading in some message forums from former employees that the severance packages were very friendly, very, very generous indeed. And while that might be nice for the former employees, from an investor perspective, you're left wondering why even bother with these layoffs if it's going to cost you $2.1 billion. It may have been better to just reduce your employee base through attrition if it's going to cost you 2.1 billion. That may have made more economical sense, and you would have kept the people that wanted to stay there, and only the people that really didn't want to be there would leave. So that's the argument I made, and that was a while ago. The other side I was pleased with, the reducing of office space, especially at a time when remote work has proved effective and it's a win-win situation. If your employees work from home, they prefer it better. It offers them better work-life balance. They don't have to waste time commuting. And at the same time, you get to save as a business your office expense. You don't have to have as much office space, and you don't have to have as many office locations. Or what I mean by that, you don't have to have as many workstations where you have to have a computer, monitor, and all of those assorted products that cost you thousands of dollars each employee. It's a win-win situation. And so I was happy with them reducing their office space. That part of it I was pleased with, but not the billions in layoffs. So I want to know more about this because they recently announced again a few hundred more job cuts. And I want to see what management is thinking about this situation. Do they have more cuts on the horizon? Are they thinking about another big layoff of several thousand? And if they are they going to say anything about doing so more efficiently this time? That's what I'm looking for in the current conference call when they talk about that. I also want to hear more about their AI plans, how they're thinking about the rollout, acknowledging how they fumbled this so far, and how they're going to go forward with those plans for 2024. Those are some of the things I'm looking for from Alphabet. I also, of course, most importantly, want to hear about the ad market, how the advertising industry is heading into this 2024 season. Are they looking for more space, more inventory? Is demand coming through more so from legacy segments, or is the industry overall growing? So I want to hear more about that. And so those are some of the things that I'm looking for from Alphabet. Of course, on Wall Street, the analysts that are following Alphabet stock, they think it's going to deliver $1.51 in earnings per share. That's up from $1.47 90 days ago. So analysts on Wall Street are more upbeat about Alphabet now than they were 90 days ago. And that goes pretty much along the lines of what I was talking about earlier, how those concerns about Microsoft taking market share and OpenAI taking market share, those have not yet played out. And so investors are getting a little bit more optimistic about Alphabet. Now, the stock is still cheap, in my opinion, trading at a forward price to earnings of 20. I've had Alphabet stock rated as a buy all year long. In fact, I've had Alphabet stock rated as my top stock to buy in 2024. So far, it's performed well, and I've kept Alphabet on my list of top stocks to buy. I've kept it as my top stock to buy. And in this video, I'll reiterate that I still think Alphabet is a top stock to buy right now. Now, in terms of strategy going into earnings, whether to buy it before or after, earnings reports are always more volatile, as I've been saying for a long time now. There's a lot of information that has been calculated into the share price that is not 100% certain to come out in the earnings. So there's a lot of probabilities that are priced in. When the earnings come out, those probabilities turn into certainties, right? These earnings expectations become actual earnings. And so the adjustment that happens in the share price can be more so than usual, right? So you have bigger price swings. If you don't want to accept those bigger price swings, then you can wait until after earnings to buy the stock. Even though I have the stock rated as a top stock to buy, it's less risky to buy it after the earnings come out. Or you can split your share purchase in 2 or 3 and say, I'm going to buy 1/3 of my allocation before earnings. And after earnings, if the stock price is the same, I'll buy my other 2/3 allocation. If the stock price jumps, I won't buy the other 2/3. I'll just stick with my 1/3 allocation. Or if the stock price falls, you can allocate the other 2/3. So there's just certain strategies you can take to de-risk the time around earnings. But overall, Alphabet stock is a buy. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.